2011. We like doing these on Tuesday because it gives you 1 or 2 days in the market, actually 2 days in the week to get the market going, waking up on the weekend and see where things are going. So it kind of gives you a better view. But we may eventually move to having some intraday, probably do half-hour intraday webinars if and when circumstances dictate. So if we do start to change color here in the market, we may do something like that. So over the next few days, make sure you're checking your emails just in case we do decide to schedule something intraday. So, but anyway, so you see here on my screen, can everybody just let me know whether you see the screen okay?
I'm not seeing anything yet.
I got to do show my screen. There we go. How about now? Everybody see the screen?
There we go.
Yeah, there we go. All right. So you can see what I got going here. We got a chart of the NASDAQ on a daily, and you can see we've come up. Now, this is like, to me, a classic, and Dr. K, feel free to chime in here, but this is a classic QE2 or QE type of market. You get a lot of red volume, and you're selling off hard over here. And you come down for a bit, and then you just come up and you get some big volume off the lows here, but you don't really get any real big volume as you're coming up. You just kind of drift higher, and that's a QE market. Now, you have a few leaders that have done pretty well. There are also some that get into trouble from time to time. There have also been some funky spin-outs in stocks like Fortinet, FTNT, and also RES, which is an oil stock that people have liked. But what I'm noticing here is we rallied all the way back up and into this area at around 2,800 or so. And you can see back here, back in late February, early March, this was an area of resistance as the market started to break down. So you're kind of at a point here where you could back down a bit and come in, or you could just keep going to new highs if the QE thing goes. Today, the Fed said that they see the economy slowly improving and that inflation will soon pass. I don't know if these guys are comedians or what, but I think if you're looking at what's really going on when they talk about inflation, let's just look at gold here. Today, gold broke out. That's a Bible breakout. It's also a pocket pivot. So I think you can be buying gold right here. And this is your breakout. You've been in a nice long consolidation coming out to the top. So when the Fed is sitting there telling us there's no inflation or that inflation is well contained, it reminds me of the subprime crisis being well contained way back in 2008. And so they're telling us now that inflation is contained, but the metals and some of the commodities are telling you a different story. Okay, so getting back to the NASDAQ index, we're at a critical point here, I think, where you could see things come back and see how they back and fill. If we take a look at the S&P 500 over here, you can see similar type of pattern, but you're actually a little bit further up, so you're near high. So you're in a position where you could consolidate, or you could just make a double top and roll over it. So you just kind of watch and see how things go. For now, we know the trend is up, but the cleanest place to play, at least for us, has been in the metals. And Dr. K and I are long the DGP, which is the 2 times power shares gold double long ETF, whatever you want to call it, 2X double long, whatever you like. But you see this thing is breaking out, and so we own that. We also own the AGQ, which is a silver. Now, some of you may have seen me on Fox Business last Friday, a few days ago. Stuart Varney was giving me a bad time about how high I think it's going to go. He's trying to pin me down on a price target. Well, if I use point and figure chart analysis from this breakout here, I was able to come up with a $50.50 price target. And for the spot market, some people will tell you in 1980 that was the high, 50.50. Other people tell you 47.50. If I look at a monthly chart of the nearest futures contract, I come up with 41.50. But I think for as far as we're concerned, we'll consider the spot price in 1980 to be around 50 bucks, somewhere around there. And if you adjusted that for inflation, that would take silver up to 130 or higher. Okay, so the fact that silver can get up to 50 and has an ability, I think it can go a lot higher. But see, when someone tries to pin me down on a price target, that's really antithetical to the way we look at the market, because we don't use price targets. What we do is we analyze trends. If the trend is moving in a certain direction, then we're moving with the trend until the trend ends. We don't know how far it's going to go. All we know is that we're in an uptrend, and you can see very clearly that we're in an uptrend in silver here. Dr. K, we had a question come in on email. Somebody wanted to know how we handle a position and how we pyramid. So what I'm going to do is I just want to show you what we did here. You see, here's the breakout in silver. So we initially bought AGQ here, and then we know that it tends to follow the 20-day. Notice back here last year it held the 20-day. I've talked about this many times. And so that was its character. Once it broke down and violated the 20-day, it had to consolidate and then break out again before you would want to come back into it. So we know that once silver starts to trend, it tends to follow the 20-day moving average. So here we buy the breakout, and as it runs up, then this becomes a buy point here. So this is actually where we added. Dr. K, you want to expand on this?
Sure. That was, I think, in reference to the question to explain how we force feed money into the strongest stocks.
Right.
And how much time do you give a stock to show itself to be a strong stock? So essentially, the market's dynamic. Your portfolio should ideally be dynamic as well. So in practice, what I do is, as stocks tell me to buy them, I will position myself, say between 10 to 25% initial positions. And then the best stocks are going to give a second buy point somewhere above where I bought it. So that will allow me to have an average cost below where the stock is currently trading. And the weaker stocks, meanwhile, I might sell half or sell them out completely. So in other words, my money is being used, force-fed into the strongest names. And the strongest names prove themselves by hitting those price points that I have. It could be a price point. It could also be that the stock is moved up for a month or two and now is basing and then issues a new buy point. So now you have your second buy point in the position. So you always want to make sure you're averaging up and not averaging down.
And in AGQ, you get a nice chance to continue to average up as it moves higher. Now, I told Stuart Barney on Friday that $50 is attainable. I think a lot higher, actually. And we all know the themes. I probably talked about until I'm blue in the face. And I've been invited to be back on Fox next Wednesday, not this Wednesday, but next Wednesday, April 13th, to talk about what else? Silver. But right now it's going higher, and it's telling you, the metals are telling you, both silver and both gold. We'll look at the GLD. For those of you who like something slower, you can do this. You can always do this too for silver. But they're all working right now, and they're all hitting on all cylinders. And I actually find this to be my best position. Would you say the same thing on your end, Dr. K, for the most part?
Yeah, absolutely. AGQ has been a champ for me. And I've pyramided that twice, and I'm looking to buy a third position if it proves itself. I think it will, because we're in that kind of environment.
Yeah, and I think also that silver will probably stop going up when I go on TV and actually somebody believes me. I remember when I first went on September 23rd of last year, and Liz Clayman, who I love, I must say, but she was very skeptical about silver, which she claimed at that time was at a 30-year high. It was about 21 bucks, I think, an ounce. You can check the chart back then. So it would have been on this chart back here, yeah, around right here. So let's see, on the SLV, that works out to, somewhere around 2021. So this is when I was on Fox the first time, and of course they didn't believe me then. They still don't believe me, and everybody thinks you're crazy. You start to develop a complex about it after a while, so you actually don't want to tell anybody that you think silver could get over $100 an ounce, because then they're ready to send you to the loony bin. But the other trends that you see bonds. Here's iShares, Barclays 20-plus year Treasury ETF. They're kind of breaking down. It's dropped below the 65-day exponential moving average. The black line here coming down to the 50-day here, so we'll see how that acts. But also you see the dollar still in a downtrend. I don't see the dollar bouncing. I heard somebody on TV talking about the precious metals running into a lot of trouble once the dollar bounces. Well, guess what? The dollar's bounced many times before, but every time that just creates a consolidation in the metals that they can then set up in and then come out of again. So I would only see anything like that as a viable opportunity. So the other one we like here is the JJS, which is the cotton, coffee, and sugar. I told somebody I was on the radio last week. Dr. K and I were both on the WallStreetShuffle.com radio show. It's a Dallas radio show. And we talked about this. Notice how it is continuing to hold the 65-day exponential moving average. This would have been a violation of the 50-day right here. You can see these 2 days you closed below the 50-day moving average, and then this day you actually move below the low on an intraday basis. But if you're using the 65-day exponential, it's not going to shake you out, and my suggestion would be to do that. Meanwhile, you've got several pocket pivots in the pattern. This thing looks like it wants to turn and go higher. It's another one that we own. We're actually finding that the precious metals and the commodities are a much more even trend. The other thing is if you run into some problem where Portugal defaults or Spain defaults or Greece defaults or something goes on in the U.S. where we have a failed bond auction, I think you may see stocks sell off in reaction, but I think you'll be safer with the metals. What's your take on that, Dr. K?
Yeah, I mean the metals. Well, the precious metals have always been a safe haven, and they're a lot more resistant to drops from bad news than normal stocks. And of course, even in 2008, I believe that gold was dropped the least out of virtually every instrument out there, every instrument in stock. So once again, gold is a good safe haven, but we're in an ideal environment where all this money printing is going on through all these central banks around the world. And that helps prop precious metals, and of course, and emerging markets like China exert added demand for precious metals such as silver. So we're in a very sweet spot for precious metals.
Yeah, and I think as we've talked about before, China is definitely gunning to replace the U.S. dollar with their own currency, and rumor has it that they'll want to back that with gold and silver. And they have huge foreign currency reserves, which they can readily convert into precious metals and build that up as they look to back their own currency with silver. I also heard a rumor that Mexico is looking at, and Mexico is actually a very silver-rich country, looking to mint silver-backed currency or silver coins. And then finally, last but not least, I've heard rumblings of some states that are in better fiscal shape than, say, California or New York or Illinois, any of those blue states, as they say, that some of the states are looking at minting or starting to mint their own currencies and their own coins in silver-backed currencies and coins. So there's a movement and a realization that the dollar is doomed. And I think that that's probably the case. And you see Bonner and Reid in Congress fighting over whether they're going to cut 60 billion or 30 billion. But when you have a $1.65 trillion deficit, and I think Investors Business Daily had a great editorial cartoon of a pie showing exactly how much they're cutting out of the huge budget deficit, and it's just a few crumbs in the cartoon. I thought that was pretty clever, but it pretty well illustrates what's going on. So two choices, default or devalue, and I think the U.S. is going to devalue. So as the CEO of Walmart said last week, look out, everybody, because there's going to be some very heavy-duty inflation coming. So regardless of what Chairman Bernanke says or any of the Fed heads, that's where we're headed. The dollar is telling you that. Precious metals are telling you that. Now let's go to the stocks. Our favorite stock has been Netflix. Straight down, straight up to new highs. Looks like it needs to build a handle. That's all I can say for now. We're holding the position with the idea that it probably builds a handle in here. Okay, so it doesn't have to go anywhere, but it should build a handle. If it starts to break down from here on heavy volume, you might have a double top on your hands. There was some talk, though. I saw a story this morning on seekingalpha.com that Facebook might seek to team up with Netflix. And I think if that happened, if you saw news like that, I think that could send Netflix on a somewhat climactic type of run, because that would probably be a huge partnership if, in fact, that were to occur. For now, that's just a rumor, and I wouldn't give it too much credence until you actually see it happen. Another one of our fun stocks to play lately has been Molycorp. Of course, rare earth metals. They bought a European miner a couple of days ago, and I think it was yesterday, and they shot up, gapped up. Dr. K, is that a viable gap up, and how would you deal with the stock now? Somebody asked us, we originally put this pocket pivot on here, which was a great spot to come in and buy it. The same thing happened here when we put this one on. So very similar types of pocket pivots in terms of the move, although this was a bigger move here, but who knows where this one's going. It's up 30% about from that initial pocket pivot. So we hope you've been able to capitalize on that. But here, you're coming out of a of a cup base, and you're breaking out. What's your take on this right now, Dr. K?
Yeah, it is a viable gap up, and actually I bought it twice. Once when we recommended, and again on that viable gap up. My
Yesterday?
my average cost is
Somewhere in between.
is 50 something. So I'm playing this from a position of strength because knowing that I have a profit already in the stock. Now, if you could take an initial position on the gap up because it is a viable gap up, it is a volatile stock, so the odds are that it very well could retrace and break below the low of that gap up day, which
right
means
here.
that you probably want to give it a little bit of porosity or slippage, shall we say. Try to hold up. If you have a position that you bought on the gap up day, you might want to give it a little more room than normal, which means it may exceed your maximum risk tolerance levels, and you don't want to be doing that. So either you buy a small position here where you can give it more room, or you wait and you don't do anything at all.
Yeah, I would think you might see the 10-day moving average, which is a magenta moving average that I'm pointing to right here, where my crosshairs are moving across. It might move up a little more. You could see a pullback into that, and that might be a spot to buy it. I could see it definitely pulling below the low of this day, which is 62.55. That's really only what, about 5%, and it could easily do that. Sometimes it does that intraday. But this could just be starting a move. Now, there is one caveat, and Dr. K, you can argue with me on this if you so choose, and that is that if you look at, let me pull up a different type of a chart here. And go to a weekly chart here. Now, I try to look at things all the time. I'm trying to pick holes in theories, and if you're long something, I'm trying to pick holes into the stock and what could be wrong with it. And something to think about here is that this stock came public at $14 a share, I think back in August of 2010, and it had a huge move, and then he formed this kind of funky base, which really wasn't a base at all, just a pullback. Really held the 50-day up here on a weekly basis, never really busted it too badly, and then came back out to new highs. And now he's set up in this big cuppy type thing, and it's very loose. There's no real tight areas in it. But it could just be a function of it being very speculative. But you might consider that if this doesn't hold, if it starts to break down, I wouldn't be too slow backing away, and definitely don't let your average cost get too far above, if at all, where the stock is. Dr. K says he has an average cost in the 50s. That's a beautiful place to be for this stock right now, because you could see it jag in pretty good, and it could pull back somewhere down below 60 if that were to happen.
Yeah, it could easily come back to the 10-day, for instance. 10-day being a form of support. Although in the last run, that last leg in December, it never pulled down to the 10-day. It had so much upward momentum.
No, never did.
And
when it
with that
finally
news
did,
out of China that we mentioned in that report, China's basically controls 97% of the rare earth element market, and they're going to be very guarded over their supply. So that bodes well for companies outside of China, such as MCP, that are mining for rare earth metals, and also have provable and what it's called proven and probable reserves in the neighborhood of 88 million pounds of rare earth ores. So this is, as far as I'm concerned, the leading company outside of China in this space.
Right. RE is another one, but less of a quality play here. It may go higher if the whole phenomenon keeps going higher. It looks like it wants to. You do have a near stop at around the 50-day at 12.56, and it's hanging out at 13.43 right now. So this could possibly go higher. But remember, you pay for a cheap stock, and you get what you pay for. So MCP is the real leader. Yesterday we put
no proven or probable reserves either.
Right.
So it really is makes it that much more speculative.
Yeah, Tech Resources is a coal. They make stoking coal used for production of steel. We flagged the pocket pivot yesterday. And a lot of people ask the question, "Oh, can't you tell us about a pocket pivot before the close so we can buy it?" But you don't have to buy exactly at the lowest possible price. You only need to be getting in close to where the pocket pivot is. So in this case, this was almost a no-brainer. Came up above the 50-day, and then pulls right back to the 50-day. And you could have bought it right there. So that's fine. You don't have to buy it here. If you go back in time, I guess you could, but you really can't. and you just buy the thing. It doesn't have to be right there. Don't be so worried about getting the exact low. Now here's another one. Somebody was confused on this one because they said, don't you only buy pocket pivots when they're coming up through the 10-day? Well, this went below the 10-day and then it came back up through it. But really the bottom line on this is a lot of times you'll see stocks running along, say, the 10-day. They'll pull back to the 10-day and then they'll get support at the 10-day and it will be a pocket pivot. So yesterday was a pocket pivot right here. Okay, and that you could have bought, and the stock's up a little bit today, and you're ahead of the game already. But that is a supporting type of pocket pivot. It's a continuation pocket pivot, so it's not really one coming out of a base, such as we see in TCK. This is more coming out of a base, so it's coming up through a moving average. You might even notice that this day here, you see the magenta 10-day moving average. You actually came up off of the 10-day moving average and up through the 50-day. But see, it's only in this type of position that you're going to see things coming up from the bottom side of a moving average and then up through the top. On something like Paychex or Verifone, I want to call it Paychex, but it's Verifone Systems, it's just finding support, and so that's a continuation pocket pivot. We saw the same thing. What was the one that we put on earlier, Dr. K?
We had APKT. Oh, we had the
ULTA. Yeah, this is a continuation pocket pivot also. You see, it's running along the 10-day moving average, and then you get the pocket pivot signature, and it comes up off of the 10-day moving average. So that's a continuation pocket pivot. Similar to PAY, the only difference is PAY comes off the 10-day after pulling down into it, and in the case of ULTA, Ulta Salon Cosmetics and Fragrances, it's actually just running along the 10-day and then it pops up off of it. That's kind of an ascending flag formation. Moving along to some of the other hotter names that we have. We noticed today we had A packet, Acme packet, or we call it A packet, but Acme packet. Sometimes if you get caught in the stock on a day like 3 days ago, you call it Whack Me packet because you get whacked in it. It was looking pretty ugly, but it turned around, found support, did not violate the 50-day moving average, and today you got a pocket pivot. So this may actually try to break out. That said, a little bit skeptical of coming in here in 1, 2, 3, 4, 5-week base. So that could work actually. That's enough weeks, maybe another week in here before it comes out, but it looks fine. People want to know about Lululemon all the time. You came out of a base on base and you are extended now, so you're not doing anything with the stock. If you own it though, you are sitting with it, and there's no reason to sell. CMG, Chipotle Mexican Grill, and as you know, these guys sell burritos, and burritos never quit. For those of you who have ever eaten them, but I won't get into that. And you're coming out to new highs again today. Look at this. I don't know what they call this. Is this what they call a square box type thing, Dr. K, or what? How do you like this pattern?
Well, what I don't like are all these names. I mean, the names are fine as training wheels, but it's really better to accustom your site to what the price volume action is showing you without getting hung up in the names. And really, ask yourself, what is the chart formation showing me relative to the general market? So always keep the chart pattern of the stock in context with the chart pattern of the general market.
Yeah.
And CMG looks great, and their food's great. Their burritos, I salute them.
In more ways than one, I'm sure. Oracle Corporation, we own this in the Follow the Stock portfolio simulator. Remember last week I was talking about this. Dr. K and I discussed this a little bit, but this was a pocket pivot here, even though it closed at the low of the range. It's kind of a weak move, but there was a little bit of market context in that. Some stocks were getting hit that day. So it holds a 50-day and comes out and breaks out to new highs, and we added it. So we have a 25% position in Oracle. AutoZone is another one that's acting just fine. You had a pullback here. That's where we entered the stock. 12.5% position in the portfolio simulator on Follow the Stock, and it today broke out to a new closing high. AutoZone is actually somewhat undervalued relative to its earnings, and so it's somewhat cheap. It's a thinner trader though in terms of the number of shares, but dollar volume is about 107 million. So that's more than adequate. We like to see stocks trading 30 to 40 million or more in average daily dollar volume. And the way you figure that out is price times volume. It gives you average daily volume. So 327, 280 times 276 or 277, you're going to get about 100, closer to 110 now. But
if the stock is really exceptional, sometimes we'll put a stock on that might not be, you know, at 35 million daily dollar volume. But in this kind of environment we've been in, it really is better to go along with the stocks that are far more liquid. Of course, you know, markets will change, and we could get into a small cap environment. You know, that could be a year off from now, and then we'll adjust that minimum requirement. But for now, we prefer to keep it at least 30 million, 35 million a day.
yeah, the stock that just is like a consistent frustrator is Fortinet. And don't ask us what was going on. We didn't see any news on Friday last week. This thing's getting whacked like that, and we just we got out of a 42 in the portfolio simulator because we had kept a tight stop of about 3 to 5% on that, just not to let it get out of control. But I don't know what's going on here. Dr. K, any conclusions on your part or any speculation as to what this kind of baloney is?
Yeah, I mean, it strikes me as some sort of manipulation. There was another stock that had the similar pattern. When you see this kind of crazy
RPC,
selling on known news, it could be motivated by some rumor that was floated. It could be any number of things. So, in essence, you know, stocks like this that exhibit this behavior are black mark, because it means if there is that sort of manipulation, it could happen again. And I don't want to be positioned in a stock that could whip me out in this manner. So I would avoid both of these.
Yeah, I kind of feel that way too. Now this will be where Fortinet takes off and heads for 50 from here. So just when it frustrates you, but you're kind of running out of gas on this. So we don't know what's going on here. People have asked us about this. We've been asking around, and nobody really seems to know. If any of you know, feel free to let us know. Endo Pharmaceuticals, great breakout. I don't know if we talked about it last week. I don't think so, but this thing's on fire. You've also seen Alexion coming out to a new high here. Some of these biotechs look pretty interesting. We don't like DNDN. I don't know what to think about this one. It's not really a pocket pivot. This could be considered, I guess, a pocket pivot up to the 200 day, but you're coming straight off the bottom. I don't know what to think about this one. I don't really need to play it, so we don't really think about it. I know people are asking
it's not really showing impressive price volume action. You know, relative strength 34 on this thing, so I would just avoid it for now. I mean, it is a speculative company to begin with, so
yeah,
you want to be if you put your money into this kind of name, the action, the technical action, should be stronger than what DNDN is showing.
Yeah, LyondellBasell is a chemical company based out in the Netherlands. We put this out as a pocket pivot on Friday, and you can see that in fact it's moved higher. So if you're able to get on board anywhere in here, this thing looks okay. What I find interesting about this stock, when you look at it on a weekly chart, is that you see this big volume here, all this blue volume down in here, and you can see these weeks here, this thing, I think this is when the market was hitting its lows, this thing stayed in an uptrend. It never stopped trying to go higher, and so you notice it closes mid-range or better each of these weeks, and the volume is up. You know, then he's trying to come in, the volume dries up. Last week you held pretty tight. The pink line on the weekly charts is basically a 4-week or a 20-day moving average. You notice it just holds that pretty well. And this could be an ascending type of pattern. It was formed while the market was correcting, and this thing could go significantly higher. So if you're playing this, I think if you bought the pocket pivot or anywhere around it, you know, you're using probably a violation of the 20-day or the 10-day as probably I'd use. What would you use here, Dr. K? The 50-day as a guide for a downside stop? That'd take you to 38.16.
Yeah, because generally it keeps violating the 10-day, so I would using the 50-day as the guide.
Yeah, and this looks kind of interesting just from the power that you're seeing in the weekly chart. So I really like this. I think it looks pretty good, and I like the weekly pattern here, kind of an unusual type of ascending base. I don't know, maybe this is 1 pullback, 2 pullbacks, 3 pullbacks. Now it's going to try and go. But if you're in here, I even think this thing could be viable even up here, because you're only looking at 38.16 as your guide for a stop. So we kind of like that one right now. Let's go through some of these others. We went through CMG. Amazon, interesting play. You know, these guys came out with their new product where you can access your music off of their servers using any device you want to. Big gap up through the 50-day moving average. I think this sort of thing is going to propel Amazon higher, and I think you may see the stock come in here, maybe try and form a handle or something, and then go higher. I think you pretty much dried out here down at the bottom on the volume. You don't see much selling volume. You undercut the lows here. You come down into this pattern over here back in October, November, this whatever you want to call it, this sloppy-looking base. And now you're coming up the right side. This thing might just continue to go higher. I don't know if it goes straight out of here or if you're going to come up to 190 and pull back. In fact, on this day, I think I told my trader, Bill, that this is going to 190 from here. Not that we bought it and played it, but it certainly did. I should probably listen to myself more often. But I think the new product shows that Amazon is a cloud play. And in fact, if you ask me, Amazon probably is the cloud, given that they are providing the servers where all of this stuff is being housed. In fact, Netflix even uses Amazon to run their movies off of, so they don't have to worry about maintaining server capacity, which fluctuates quite a bit for Netflix, and that's really one of the strengths of AWS or Amazon Web Services. Dr. K, do you remember what the name of the product is?
I don't know the name of the product. I just know that Amazon's got some very clever ideas brewing. In fact, a former classmate and a good friend of mine is heading up the project that, I guess the best way to put it is, we all know how Wikipedia grew so fast and there was no financial incentive. It's just a lot of people around the world combining their efforts to create all these encyclopedic entries. And so what Amazon has done is they're now creating the Wikipedia equivalent for screenplay writing. And so in other words, you submit your screenplay, and then everyone who wants to can go ahead and modify it and adjust it into something that they prefer to see. So you end up evolving all these different screenplays that Hollywood then can step in and say, well, I like this one, and then there's financial incentive at the end of the rainbow. But I think it's a clever idea because you're getting the power of people to work on the scripts and evolve the scripts, just like Wikipedia used the power of people to create information on their service.
It's called Cloud Drive is their new product for storing your music. So I think Amazon could turn into a monster and come out of this pattern. If it did, that would probably be quite viable. I like this gap up. I should have listened to myself, like I said here, and bought stock and stuck with it. But hindsight is always 20/20. I think TibX looks okay here on a daily chart. We flagged this pocket pivot here for you. This came out on earnings. Stock pulled down back into the breakout point here through the top of this base, just under 26, and turned around, flashed a pocket pivot, and we were all over that. Now you notice you've moved up, you're pulling back in, volume is drying up. Keep an eye on this one. It looks like it might want to go higher, but we'll see. Probably going to depend on the market. It's possible you could run into some near-term weakness if the government doesn't get their act together. On the other hand, we have friends in Belgium who tell us the government there has been shut down since last year, and their economy is now growing faster than it has for quite a while. One other caveat on TIPCO is that you're actually coming out of a 1, 2, 3, 4-week base, and then you break out to new highs. Not sure if that's what you want to see in terms of length, but you can definitely see it gets support off the lows here. But it's acting okay, and I think social media, that's what these guys do, social media is going to be made perhaps a concept for investors going forward. So you know how cloud computing was a big thing back in September of last year when we started to see Riverbed and F5 and Salesforce and VMware and all the stocks were starting to have moves. You even saw a stock like Cavium, which is a fabless chip maker, was also moving back then. You can see here when it was breaking out. But that theme, cloud computing, was something that the market latched onto. And you can think about solar stocks in 2007, as well as the fertilizer stocks and shipping stocks. When there's a theme the market latches onto, you start to see names that fit that profile. And so TIBX, social networking, Facebook has delayed their IPO until next year. And so everybody's going to be jonesing for their Facebook IPO, but they're not going to be getting it, so they're going to have to find it somewhere else. I noticed CRM was interesting in that they announced that they were buying Radian 6, which is a corporate social networking company. Stock has moved up to the 50-day, has pulled back, and is holding the 50-day pretty constructively. So you might keep an eye on this one. This one could go higher, and in fact, I think on this day, I told my trader Bill that it's probably going to 140. So maybe I should buy it here and maybe listen to myself here, because you have 1, 2, 3 waves down. I don't really see this as a short anymore. I see it as potentially going higher. So I think I'd watch this. If you want to play it using the 50-day moving average at 131.50 as your guide for a stop, that's pretty close, 1 or 2% away. So kind of like those odds. And this thing could turn around and come higher. One of the things you'll see happen as the market's setting up, you start to see stocks come back, and they're in comeback mode. And of course, we saw this one, Tech Resources, in comeback mode. You're seeing Freeport-McMoRan in comeback mode. You're seeing Cummins Engine in comeback mode. It's come all the way back up to the top here, and I don't know what you call it. It's a big, ugly double bottom. This is kind of a cup here. This thing looks like it wants to move out of here. This could all be telling you that the government is going to continue with what's basically a dollar devaluation program one way or the other, and that's likely to continue to drive stocks higher as they continue to devalue the dollar. And so that's one theme that you have to be cognizant of. And what we're seeing here is we're seeing a number of stocks start to come around the other side. So I noticed a lot of people asking us questions about obscure stocks. If we're not talking about it, it's not worth looking at in our view. So if you have some obscure stock that you want to know about, that's not really what we're into, because we're here to pick out what we think are the best. Somebody asking about Travel Zoo. It's just streaking to the upside. You could have come in here. There are pocket pivots in here coming around. Yeah, probably right in here. You saw one breaking out here on pocket pivot volume signature, but extended from the 10-day. And that would have been your entry. But at this point, this thing's extended and it's running, so you don't need to do anything but hang out. Baidu is another stock that continues to act well. There's nothing to do here. We flagged pocket pivots inside the base before, and they've come out, broke out here. Once it breaks out, you're using this level here around 129, 130 as your support on any pullback. So far, the stock's moving up, but Baidu continues to move higher along with Sina Corp. Sohu, which is a little bit squirrely, and we did flag the pocket pivot here on this day. Which day was that? Right here? Right, Dr. K? This day?
I believe so. I'd have to check, but that sounds right.
Yeah, one of these days was a pocket pivot on a breakout, but the stocks moved rapidly higher, and NetEase is doing the same thing. Now, think about something. China has issues with inflation, and today they raised interest rates. I think it was 1/4 point. And we talk about this need they may have to, or desire to, back their own currency with gold and silver in an effort to create a global reserve currency that replaces the U.S. dollar. If that were to be the case, and if they have a partial or full decoupling from the dollar, which right now the yuan and the renminbi, whatever you want to call it, is pegged to the dollar, that would send Chinese stocks probably higher, and you have to wonder whether the action in some of the Chinese stocks is telling you that that's going on. I noticed C-Trip has started to move higher, and so there's something to keep in mind. Even some of these are trying to come off their lows. Remember this one, LFT, Long Top Financial, which is a Chinese stock. But we're wondering whether some of these are telling you that. And that tells you something with respect to the dollar and where precious metals are going. So it all kind of dovetails together for us. Somebody's asking about AGQ, but we just talked about it. We don't see a third spot to add yet. Do you, Dr. K?
Not yet. It's sticking straight up. So sit tight if you've got a position. Otherwise, have patience to wait until it comes back into a buying range.
Yeah.
Someone asked about these ETFs. Some of these ETFs are extended, and how do you buy them if they're extended? Well, you don't buy them if they're extended, but you wait.
So
you wait
TNA,
till
for example.
Yeah, I mean, you really want to, if you're going to buy something that's, say, 2% above or 3% above where you should be buying it, that's okay, but know that you've got that much more risk in your position. So you might tailor your position size accordingly. Or you also might have to adjust your sell stop as a result of having paid up higher than where you should have been buying the ETF. So in other words, it's dynamic. So the more you pay for it, the smaller your position size should be, because you're going to have to give more room to the downside to avoid getting whipped out of the position.
Right, because you could pull all the way back in here. And what we note is that the Russell 2000 is leading the market right now. It's broken out to new highs. I don't think the Russell 2000 index itself has, but the ETFs have. And so right now we like the TNA as one that we set to play. But if you're coming in on this now, I don't think...
Actually, yeah, the Russell and the IWM track very closely, so the Russell has broken to new highs.
Looking at some of these questions, somebody's asking about open text. Well, that broke out, and now you have a pullback down into the 10-day moving average, which it held. So it's not coming apart yet, but it's a thinner stock, and so it runs up very rapidly and pulls back in. You might consider, you could add, I suppose, here if you wanted to, if you like to buy on weakness. Let's see, moving along here. Somebody asking us, how do you use information from overseas markets? You don't really. You just watch the price volume action. Somebody's asking about which ETFs can you get into now. If you're thinking about, you want to buy an ETF and you want to do it on the basis of the recent buy signal, I guess the GLD is probably the only thing I see in one of the better positions. JJS is another one, but this is making the assumption that if the market goes higher, then so will these ETFs and so will commodities, which seems to be the cleanest trend right now. So if you want to come in and buy something right now, probably GLD is one of the lower risk ETFs, and it should trend with the market. You'll notice gold was correcting before the market did, but then it really started to correct when the market broke down, but it came out sooner, and now we're going to new highs. And so this breakout, I think, is very viable, and gold tends to have some pretty good moves after it has a breakout from a decent consolidation. So that's how I would answer that question. One stock that we've been following is Jazz, and Jazz just continues to trend higher. For now, it looks to me like you would use the 7-week rule on the 10-day moving average, and the only thing that would blow you out of this thing now would be a violation of the 10-day moving average. Is that right, Dr. J?
Yeah, it's just counting the weeks here. That's exactly where I would be selling it, because it's had a beautiful run. So yeah, odds are when it finally does violate the 10-day, that's a good place to exit.
If some of you are hearing vacuum cleaners in the background, I apologize for that, but they're putting in, I'm working from my home office today, and downstairs just below me they're putting in a new bar. So they've been working on that and putting new granite countertops in and things like that, so they're busy doing that. And no, it's not because of the market environment that I need a new bar, it's just that I just need a new bar. Something. I don't think you should be shorting anything, by the way. I know some people are asking, rim short. Yeah, it looks pretty ugly. I think we're in a bear market, probably going lower, but at this point you're kind of extended. You could probably short it using the 200-day moving average as your stop, but it's tough to make money shorting right now. And this is kind of a in between here and nowhere, basically, as far as I'm concerned. So it's hard to gauge this. If the market comes off, it's going to come off too. But I really think you have to look at something like F5 if you're looking for something to short, because you got this thing going on here where you have the neckline. It went through the neckline, bounced off it, ran into the 20-day moving average, the green line here. Now you're heading for the neckline again. It might break it. It really depends on what the market does, I think. If the market weakens here and starts to back up, this may go through the neckline. But this is one of the few, I want to emphasize, one of the few correct patterns to short off of that I see in the market right now. There's really not too much beyond that, and I don't really think you need to be shorting stocks necessarily I've been trying to test some things, and they're not really working. You know, LVS, if you recall, we were using Las Vegas Sands as the model for this was Qualcomm. But if you go back and look at that old chart, Qualcomm broke down and then went through the 200-day moving average. It didn't bounce off. This thing is bouncing off and trying to go higher. And so with Win coming out to new highs here and breaking out, I don't think you need to mess with this. And like I said, I don't think it's time to be shorting. I think you're looking for long ideas primarily, and some of the newer things that are coming up and around, you know, like this, or some of the newer breakouts that we put on. We put this one on, I think, a while ago. ULTA coming out. You know, some of these stocks look better to me. This TIBX, you know, I'd be focusing more on these and trying to get on the short side, because this market, as of yet, doesn't seem to want to let go. And you're probably better off waiting for shorting activities or to commence shorting activities until you see a sell signal on the model. That's usually when it works the best. I know that last year in May, when I was able to double my account roughly on the short side, that occurred right as we got a sell signal on the model too. So there was confirmation there. So to me, that's helpful. If you're in a buy signal right now, I don't think your odds of making money necessarily, outside of a couple of you know, quick day trades here and there, you're going to be able to make a lot of money on the long side. People ask about OBTI. Somebody asked, and it's a reasonable question. You know, everybody wants to know how can I take all of the risk out of the stock market? You know, I want to be able to buy stocks and never have any risk. So can you please show me how to avoid gap downs like this on news? And the bottom line is there's no way to avoid them at all, unless you buy a crystal ball or you have some way to tell the future, or you get in on the rumor wheel. The rumor circuit, because this was caused by news that Apple is going to be using another supplier for their camera devices on their iPads and iPods and whatnot. So this thing broke down on top of the base, and it's holding right now, trying to get support. What would you do with this, Dr. K?
Well, if you were holding the position at the open, just dump it, because odds are it's going to go lower. And it doesn't matter if it's down 5% or 15% or more. Generally, just sell it. Just sell it at the open, and then ask questions later. Don't try to recapture some of the gain during the day, because I've seen a lot of these stocks, they gap down and then they end up closing at their low for the day. So you also don't want the headache of having a stock like that in your portfolio, because then it's going to distract you. It's going to take your focus away from new, fresh names that you should be putting into your portfolio.
Now, one thing that Bill O'Neill always used to say is if you have a stock that gets hit on some news like that, if it doesn't recover in a couple of 3 days, or it starts to move lower, you should probably just sell it. If the news is bogus, it'll probably recover pretty quickly in general, so I wouldn't hang out with it too much.
But for gap downs, generally avoid, I wouldn't hold on to a gap down for 3 days, because I've just seen too many. The odds are against you for having, recovering any of that loss. Generally,
even if it's on news?
It doesn't matter what the news is, really. I don't care what the news is. I just ask questions later, because the news maybe it is bogus, and maybe the stock does have a snapback, but for every one that does that, there's probably 10 that don't. So the odds are against you holding on to such a gap down.
Yeah, that's true in practice. Bill would say hang out a couple days, see if the thing recovers, but usually we'd be out of that thing in a hurry. So, and I don't really care to have stocks like that either. I wake up in the morning and tell my stocks to give me a reason to sell them, and if they don't behave, they're gone. Joy Global breaks out of the base and you pull back to the top, so probably viable right there. Deere, kind of the same thing, but it was a little more decisive on the upside. It's holding up above the breakout. That's acting pretty well. Nothing really too fancy there. Somebody asking about Ford. We don't think much of Ford. Coming up the right side, there's nothing there. Do we prefer stocks or ETFs?
Well, it depends. Both are applicable in various market environments. I mean, in the current market environment, I love the gold and silver ETFs. But in any market environment, I love the ETFs that track the NASDAQ or the Russell 2000 or even the S&P 500, just simply because the timing model stands on its own record. So I do try to put part of my portfolio into these ETFs that didn't exist actually 3 years ago. Now we have a huge array of ETFs that we can use to diversify our portfolio, but not diversify to bring returns down, but actually to enhance returns, especially if you're dealing with 3 times ETFs like TNA, which is one of my favorites.
So no, we don't have a preference. You know, if there's something going on and an ETF turns out to be the best vehicle to ride the trend, then that's where you go. But you know, I think there's too much. People desire too much definition of everything. You know, do you use ETFs more or ETFs less? And a question I probably should address right now is we got somebody asking us if we would go over the win-loss ratio for pocket pivots and how members of VOSI can use this to their advantage. And when someone asks a question like that, they're basically missing the point entirely, because they're trying to look at pocket pivots as some sort of system that you buy every single pocket pivot and there's going to be a percentage that win and a percent that lose. That's not the point really at all. The point is to get yourself a nice entry point early on, such as we have here with MCP, and then work your position from there. We're not saying that, oh, out of 100 pocket pivots, 78% work, and so you should develop a trading system on it based on that. That's really kind of silly, and it defeats the whole purpose. The idea of a pocket pivot is to give you an alternative buy point in a leading stock in case you want to build a position there. Now, generally, we're happy if we're right 1 out of 3 times, because you can get stopped out of the 2 times you're wrong and score big on something where you're right, and you're doing fine. So you don't need a win-loss ratio, or even that's not even really relevant. Dr. K, you want to expand on that?
Actually, it's the least important statistic. In 1997, I was right about 20% of the time. For every stock I bought, there were 4 losers. And I was still able to finish 1997 up 102%. And that's simply because I handled my winners the right way. And Bernard Baruch used to talk about that in an entirely different era, that it's all how you handle your winners and how you cut your losers short that determine the outcome in your portfolio, as opposed to your win-loss rate. And I remember Bill O'Neill telling me in good markets, his success rate typically in base breakouts is about 50%. And that's in good markets. And this would be in the late 90s. And I would say with pocket pivots, the success rate, it's probably around there, maybe a little higher, because you're buying within the base, so you have more of a cushion to start. So perhaps there's a maybe 60% success rate, but it's irrelevant. It's irrelevant because your winners that really go well are going to make all the difference in your portfolio.
Yeah, and if you bought, say, a pocket pivot in MCP and maybe a couple others, you might actually end up just focusing on this one because it's the one that follows through the best, and then it follows through with a breakout. Somebody asked us, where would you take profits on this? When do you pull the trigger? To me, that's kind of another silly question, because you're just breaking out of this base. So, you're using pocket pivots are a tool. They're not a trading system. They're not a trading system where you're going to buy 50 pocket pivots that your system identifies and then rely on some win-loss ratio to create performance for you. You're using them as a tool to get in early on a position, and it gives you some advantage, especially in funky markets like we're in today. So, USO, getting back to some of the commodities, the USO, oil's going higher, it's kind of a no-brainer. The DBC, which is the commodities ETF, the CRB index, is what it mimics, but it's mostly in oil. So you can see a little bit, it looks like USO. DBA is the agricultural products ETF. It's probably going to go higher coming off the 50-day moving average here. It looks like it probably wants to get a nice breakdown and shakeout here. This occurred on the Japanese news. I would note that Japan is starting to roll over again. So what is this telling you, Dr. K?
Well, I'm not surprised. I mean, you got a lot of volatility in the pattern, so it's gonna do its thing. I mean, a lot of these, when you have a big break like Japan did, sometimes you do get a retest that does occur. I would actually be surprised if it went all the way down to that low around 920. But nevertheless, it's going to give you a lot of volatility, and it's not the market to be in right now.
No, I wouldn't touch this thing with a 10-foot pole. This is a nice bounce to play off the lows, but you can see that ran out of gas pretty quick, and now it's doing a little swan dive. We were talking to somebody, was that a couple of weeks ago? I think we were on Wall Street Shuffle, and Dan Stewart was mentioning that people they know think that Japan is going to fall off the face of the earth, both from a fiscal and economic standpoint. Maybe that's true, I don't know, but this is not something you want to be messing with right now, that's for sure. Somebody's asking about TDSC. Looks okay. Thin stock, though. Breaks out here. You get a pocket pivot in here. No, that's not a pocket pivot. This is right here. That's a pocket pivot, and it moves to highs. I don't know. It looks okay. Doesn't look too bad. What do you think of that one, Doctor?
Yeah, I mean, you got the gap up. You got a gap up in February, which always bodes well for the pattern, and then it bases for a little while. Then you had that nice pocket pivot in there.
Yeah.
So it's extended here, but if you bought on the proper pocket pivot, just sit tight.
Yeah, 3D Systems. This is a good one. This is a lumber ETF. This probably comes into play. They're going to need a lot of lumber to rebuild Japan, I guess, with all those buildings that have been washed away. But I don't know. Next time, maybe they should just build houseboats on the land for everybody. So when this next tsunami comes, they can just ride through it. Not that it's anything to joke about, but lumber is breaking out to a new high. Nice gap up here. Looks kind of interesting. A real thin ETF, but that looks kind of interesting. Somebody mentioned that. We talked about EWJ. Racks. Looking good. Racks, up. Nice breakout, holding very tight. Probably wants to go higher. So it's all going to depend on what the market does, but we'll see what happens in the next few days. Some of the metal stocks, we're looking at CMI and FCX coming back up. CMI not a metal stock, but they make engines, auto truck engines rather. I actually once interviewed with Cummins at one time. But anyways, FCX is a metal stock, copper and gold, and you're seeing CLF, another natural resources stock coming up. But straight down, straight back up. So I don't know. This needs to do some work here, but these things do fake you out pretty well.
Yeah, these commodities related names tend to trade in pretty wide bands, and that makes playing them fairly tricky.
Yeah. Somebody's asking, since the overall market volume has been low, with the NASDAQ decreasing the weight of Apple, will that just have a positive effect on the TQQQ? I would say it does if the TQQQ still goes up and Apple goes down. What if Apple takes off and breaks out again? Then they'll be sorry that they didn't have more. But if Apple's weak and it's not such a heavy weighting, then yeah, that would actually be a positive effect. But it doesn't tell you what the other stocks that make up the TQQ or the NASDAQ 100 are going to do. So somebody's asking about the weak volume coming up. I was talking about at the outset of this presentation, which is that you have had volume. Well, you've seen increases in volume like we did on the follow-through day a couple Thursdays ago. You see increases in volume, but you haven't really seen heavy volume coming up the right side. And so what happens here, let's see, where's my, go to a NASDAQ chart here. What I'm talking about is that you get a lot of heavy sun, but notice how the volume here coming up is lighter than it was coming up during the uptrend. You haven't had very many days above average. That may or may not be a problem because so far the volume on the upside has been more than the volume on the downside, so you haven't really run into any sell listings. So it's not necessarily a problem. You don't need to try and anticipate things or develop a view of the market based on whether the volume on the rally has been weak or not. If on balance it's better or greater than the selling volume, then of course it's fine. So until you start to see much heavier selling volume take the market down, then you're in trouble. So there's no real need to anticipate anything here. Somebody has a question, margin, question mark. Don't know what that means. Will you use margin? we always use margin. Sometimes we use margin really fast, like we're in cash one day and we go long and we're on margin. So yeah, we use margin, but is that going to help you figure out whether you should use margin? That depends on your style and how much risk you want to take. When we were at O'Neill, some of the managers, like me, I'm a plunger, I'll go in heavy and be using margin. Dr. Case will go in and he can be using margin pretty quickly. But there were also some guys who ran money at O'Neill, they would never use margin. So it's kind of your own preference. So just because we do it doesn't mean that that gives you the green light, because if you do use margin, it's a lot more risk, and if you're not attuned to handling that, then you're just going to get yourself in trouble. So
yeah, we used to, margin's a double-edged sword, and there were times in the 90s when every single day I would get my buying power, and I would use up every single dollar to make sure I was maxed out every single day, because you were in a very much of a sweet spot at times, and you know, I just wanted every dollar to work for me. But the moment the market came off, and you're sitting 200% long the market in fairly high octane names, you could reverse a lot of those profits pretty quickly. So you have to be very careful with margin, the way you handle it, and you really should have your eye on the ball all the time if you're going to be that far into margin.
Last couple of questions here before we wrap it up. IO, had a pocket pivot. It looks okay, but it's a thin, cheap stock. So I'm not really that excited about it. LXU, I don't know. If we thought these were worthwhile, we would put them up on pocket pivot alerts. That's basically the bottom line. We pretty much see everything in the market all the time. We got Chris and I and Bill, our trader, all using our systems to screen the market in real time. So we pretty much see everything, and then we decide what we're going to put up there and what we're not. We did put up this one. It's a semiconductor, Teradyne, but it's a teenage stock. The other one was FCS, Fairchild Semiconductor, another pocket pivot. Actually, you know what? Volume is incorrect here. Let's move to go to that. There you go. That's the correct volume. So that's a pocket pivot. I mean, these look okay. They're teenage stocks. We're not expecting a lot out of them, but they're okay. But in general, if you don't see us put out a pocket pivot alert on something, it means we don't really care for it. Doesn't mean it's not going to go higher, but it's really something we're not really thinking about. So that's Dustin, to answer your question, that's kind of where we're with IO and LXU. So anyways, you can see the picture of the market here. You've come up back to the highs on the indexes, and you're kind of hanging out. You may need to go sideways for a while, but just kind of keep an eye on it. As long as you own a stock that's acting okay, then you're okay. But again, we favor the SLV and the AGQ. We like silver, and right now we think your best viable situation is probably the DGP or the GLD to play gold, and so we would be there buying these now. So we think that's probably where you're going to do well. JJS we like as well, and then of course there's a smattering of stocks all over the place that we're talking about. LYB we talked about, that looks very strong. You want to review the recording of this presentation, which should be up in a few hours once we finish up here. So that's pretty much it. You got anything else to add, Dr. K?
No, I think we've covered it for today. We're in a QE environment, as we know, and QE is winning, clearly, because the market's been more or less on a bull trend since March of 2009 when it started. And all this bad news out there, whether it's the news out of Japan, or the unrest in Egypt, or Libya, or the earnings disappointments from the cloud computing group, nothing seems to be able to take down this market by more than 10%. So I'd say just keep enjoying the trend. The trend is up.
Yeah, and we're going to try, or we have been trying to be somewhat selective in the names that we put out there, and I think we've had a pretty good success rate since the follow-through a couple of weeks ago. And so we're going to continue to focus on that in terms of trying to bring you what we think are the best names, because you can find a lot of names out there that look good, but really trying to whittle it down to what the best quality names are that have some of the better potential, like the MCP, and some of the things we identify, like in the LYB with the way that weekly chart, which I was showing you, looked, where it's pretty strong. with all these big up weeks in here on strong volume. That sort of thing is what we're looking for. And so we'll try and flag those as best we can. And my advice is if we're not looking at it, you probably don't need to be looking at it either. So that's what we're here for. Anyways, any more questions for us, please feel free to email us. And we'll catch you guys next time. All right, thanks for coming. We'll talk to you later. Bye-bye.
Take care. Bye-bye.